much attention and focus on meme coins. And for those that want to have a conversation with our speakers, if you can bring that conversation towards the back hall in that dim area, just so we have more quiet space for our current speakers. We'll just wait for our new attendees to get settled. All right, we are doing it, guys. We're just cruising through today. Not much left to go, but all really great content so far. Would you agree? Yes, yes, would you agree? I agree. All right. Are you guys ready? I'm gonna say, are you ready to rumble? I was gonna say, are you ready for our next speakers? Yes, yes, let's get this energy up. Yes, yes, all right. Well, we're gonna be discussing RWAs, the tokenization wave in global financial markets. And we have 5 dynamic speakers that we're gonna be bringing to the stage. And our first speaker that I would like to welcome is Kavan. Please step on the stage, Kavan. And Kavan is with Draper Dragon. Yes, round of applause for Kavan, please. Natacha Dezert from BNP Paribas, please come to the stage. BNP Paribas Securities Services, welcome. Eliézer Ndinga from 21 Shares, welcome to the stage. Cathryn Chen with Radiate Ventures, welcome. I feel like we should do a drum roll now. Last but not least, Tanvi Singh, welcome to the stage. Oh, I love this excitement, yes, all right.
Yeah, they work.
Can you guys hear me okay? Can you hear me okay? Oh, there we go, awesome. Thank you for that great introduction. Hey everyone, I'm Kavan. I'm a partner at Draper Dragon. We broadly invest in crypto, but have been very bullish on the RWA space for a couple years. Some of the investments we've done are Mogul, Centrifuge, and then recently OpenTrade. And I'm very excited today to do this panel with Natacha, Ellie, Cathryn, and Tanvi. I'm going to try and talk as little as possible so this group can share their awesome insights in the RWA space. So with that, Natacha, maybe you want to give your introduction?
Yes, hello everyone. Natacha Dezert. I've been working for BNP Paribas for 18 years now, holding various positions within the Securities Services business, providing post-trade services for our institutional clients. And since 2019, I have the chance to be part of the dedicated blockchain and digital assets team of Securities Services, working on 4 main streams and use cases. Fund administration, exploring how blockchain could streamline, modernize fund administration, custody of digital assets, and our focus of today, tokenization, both of securities, mainly bonds and fund shares at the moment, and also tokenization of cash, mainly focusing on wholesale CBDC, and being very busy at the moment with the wholesale CBDC program recently launched by the European Central Bank.
Go ahead, Ellie.
Sure. I'm Ellie from 21 Shares. 21 Shares, we are the world's largest platform for crypto exchange-traded products, or ETPs. We have about 45 products from single trackers like Bitcoin ETP or Ethereum ETP, as well as baskets, shorts, and multi-asset products combining, for example, gold and Bitcoin. We have about $7 billion in AUM around the world, and we launched the world's first Bitcoin spot ETF earlier this year in the first round allowed by the SEC. My job is to actually oversee product innovation, partnerships, as well as spearheading tokenization, especially tokenization of crypto assets, but also tokenization as well of securities and cash.
Hi everyone, my name is Cathryn Chen. I'm the founder of Radiate Ventures. We invest in deep tech, fintech, vertical SaaS. In another life, I'm also the founder of Infinity Finance. We're a Web3-based tokenization platform for private equity, venture capital, shares. And a little anecdote is we somehow got Vitalik to help us build the backbone of that platform back in 2014 when nobody really understood what was going on, especially when we tried to tokenize shares on Ethereum. We had a little bit experimentation in Asia. Also now we're based out of Zug and Bahamas.
Hi, my name is Tanvi. In my previous life, I worked for UBS on the dark side and helped build up the structured product on Ethereum public chain as the head of technology for the group, amongst all other exciting stuff that we banks do in CBDCs and BIS and the central banks. In my new life, I'm on the board of Global Blockchain Business Council, which is the think tank all things blockchain. Has been in existence for the last 7 years, and a couple of other hats in terms of building up a stealth startup in the area of RWA tokenization. And our concept and philosophy goes in the integration, the buzzwords, AI and blockchain, but more in making our assets smarter. So smart assets is the philosophy we go with. And the more information sensitive our assets are, the better the value they would bring back to the chain and henceforth be competitive with the traditional finance products. So moving on from the dark side, hoping to be on the bright side.
Thank you guys for those great introductions. As the crowd can see, everybody on this panel has been in RWAs for a long time, and we're finally getting to the point where there is real-world adoption. So our first question is examine how tokenizing financial asset instruments is reshaping liquidity, accessibility, and global trading dynamics. Natacha, maybe you want to kick us off?
So definitely blockchain and tokenization has a lot of potential in all these areas. To improve liquidity, a lot of potential in collateral management, for example, with the ability to move collateral and/or collateral ownership faster and easier. A lot of potential as well in margin call management, another example, or also to perform intraday repos. You also mentioned accessibility. I guess,
Yes.
Regarding accessibility, as tokenization allows fractional ownership, it also indeed enable a wider range of investors to have access to certain investment they cannot access today by fractionalizing large illiquid assets. I'm thinking about real estate, for example. Regarding global dynamics, of course, a lot of potential here as well with 24/7 trading and settlement, removing cutoff constraints, and of course, T0 atomic settlement. I'm not sure I wouldn't say is reshaping liquidity and accessibility. I'm not sure we are there yet. I would say these are more challenges today, liquidity and accessibility, but definitely a lot of potential.
That's a really good point. I mean, it's still very early in the adoption cycle. Tanvi, you guys were very early in your time at UBS, right, in looking at tokenizing structured products, so maybe you could chime in on this question second.
We were the late followers to some of the other big American banks on building up platforms and spending a lot of money resources on this exercise. But most of the work that we have seen from the big banks is with private chains and private blockchains that, in our view, creates islands in different places. So we as UBS, or we were as UBS, did do a lot of these experimentations and became part of a lot of this consortia-based blockchain projects. But the one that I feel most exciting and more forward-looking is exactly the structured product that we built on Ethereum. And I'll talk a little bit about the business case. I believe when we talk a lot about the benefits of what tokenization brings in, I think the audience here is much more mature for us to not talk about those basics, but to talk about the economies of why should you tokenize these assets, what value does it bring in, not just for the Web3, but also from a perspective of the big banks. And that's where I see that most of the banks are now thinking more on the objectives and less on the POCs and pilots that we have been engaging in the last 5 to 7 years. So this was a project we have been working on for a while. We went back and forth because the regulators did not want the big banks to be on public Ethereum at all. So we spent a lot of time talking, discussing with the regulators across the globe. And being a big bank, it just isn't okay that the regulations are really friendly in Switzerland and the regulations are really friendly in, say Singapore. You got to really take care of all the jurisdictions through which your value chain needs to go through. So we've kind of done that work. It took us 3 years to be where we are today. But in that context, the learning that I had was, why would you do tokenization for these structured products? Because these structured products are anyway working on a very mature infrastructure at most big banks. So for UBS, the value proposition is not to take much risks with these very exotic derivatives, but to make sure that they provide those products to their very wealthy clients. And being the biggest wealth custodian on the planet, it's much more easier to, without doing KYC, without getting into the permissionless part of the different participants in the ecosystem, you could look for that value chain to be given back to your clients without exposing your clients to these other banks. So for us, that was the value chain of why we wanted to do this. And for different banks, they're all looking for their own value chains. But I think we're slowly moving toward public, because to create an island of yourself is not going to take you far. And the same context, now I'm working on a couple of other very amazing opportunities of how do you look for the economics, how do you make your assets a lot more smarter, and we can talk a little bit about that later on in the panel.
Thank you. Ellie, I'd love to get your perspective. You guys were the first to tokenize Bitcoin and put it on chain. I think that's made a big difference in liquidity.
Sure, and also I think for many people, when they think about tokenizing Bitcoin, they're like, well, but this is not an analog product. Why would you tokenize Bitcoin? Well, the reason is because blockchain, unfortunately, and excuse my French, are a little bit dumb. They're not connected with one another. Bitcoin is not a smart contract platform. Ethereum is one of them, as well as Solana. So if you want to have an easy access to Bitcoin on, let's say, your MetaMask wallet, and use that on Aave or any other DeFi applications built on top of an entire smart contract platform, well, you need to actually make Bitcoin accessible as well. So think about when, if you have an iOS device and an Android device, well, you want to have Instagram on both, right? So you want to make sure that your experience is the same if you're using PayPal or any other mobile applications built on top. And to the question around not just digital assets tokenization, but also real-world asset tokenization, when we think about the structure of ETFs, we have multiple service providers and several intermediaries. We have fund administrators, we have transfer agents, we have custodians, we have the market makers, the authorized participants. And I think where we are today when it comes to tokenization is that we are actually giving an easy access to a software which is a global ledger. A single one that would allow, fund administrator to do their accounting instead of using several softwares in order to do the tax reporting, to do the accounting, and all of these stuff that actually matter a lot for legally these intermediaries. But at the same time today, existingly, they're using several softwares for even the issuance, as well as redemptions and creations of the shares of, for example, an ETF. And I think right now, blockchain, the premise is to provide an easy access to a global ledger where all these services can be built and customized for the different service providers. And then down the line, we're going to see more disruption at the front end, where the intermediaries are going to be less and less, unfortunately relevant, but I would say more consolidated. And that's why today, when you think about the infrastructure of the blockchain, we're moving away from dial-up to bandwidth. The blockchains today are very slow. Like 50 transactions per second for Ethereum. This is where you were waiting for 5 minutes to get your web page downloaded, right, on the web in the 90s. This is where we are. Some blockchains are much faster than others, but they have some trade-offs. Others are more centralized than others. But I think at the end of the day, we are seeing the disruption at the infrastructure layer that would benefit the end consumers for lower prices, for example. But we're not there yet, but that's the exciting part for sure.
That was a great overview. It's cool that there was a whole spectrum of different products that are tokenized, right? Structured products, one of the most liquid markets in the world. People can use blockchain for that. Bitcoin was very liquid before, but now it's even more liquid. And then Cathryn, you've been tokenizing private shares, which is historically the least liquid asset class. So maybe you could talk about the trade dynamics there.
Yeah, sure. So our use case is very specific. When we first got started in 2014, I also came from traditional industry. I was at Deutsche Bank, JP Morgan, Rothschild, right? I headed the IBPB partnership group, which is really offering pre-IPO shares to pretty much the billionaires. We have our 500 global JP Morgan top clients that gets access to these things. We used to have them sign this thing called the big boy letter, right? You got to be a big boy to be part of this. So, I kind of got exposed to that world and realized how illiquid that asset class was, right? Even for billionaires that buy into the, JP Morgan offered SpaceX, at the time Twitter was a big one, right? So, but people always complain, once I buy into it, what do I do with it? Do I just hold on for the rest of my life till I die, right? Literally people were like so scared of that. So I thought it was like a biggest problem for those type of clients to get some type of liquidity. But the problem is in a old world, right, where you just sign a contract that's like 40 to 100 pages long. You have no idea what you signed up for. I had a client who basically complained about, oh, I bought into this, but I have no idea whether I can transfer or not. They don't even know the concept of rights of first refusal, where the company needs to approve every single transaction. So good luck. Even as a professional investor, I have to go through a 30-day period where I have to beg every single cap table investor to let me go through, right? So the Sequoia, Lightspeed of the world needs to say, okay, I like you enough for you to be on the cap table. Otherwise, please don't, right? So as an individual investor, you have zero luck in getting this done. Let's be honest, right? The real world of VC is very, sorry to say this as well, ancestral, right? So basically, you have to know somebody to be even part of the cap table. So what I've noticed is that in order to solve the liquidity issue, you have to create a structural, change in the entire ecosystem. So the way we looked at how some of this is done is through funds, right? As you guys know, there are securitized other products, but very few talks about individual shares, because when you buy into one single stock, it's very different from buying into a fund. And many investors, especially retail investors, are interested in buying one stock. Like today, everyone wants to buy into NVIDIA. But how many people want to buy into NVIDIA like 10 years ago, and you didn't have that, or some company that's private, right? So we offer them the opportunity to buy into that one stock they really believe in, and give them an opportunity to buy and sell pre-IPO. So in order to do that, we have to figure out the structure that makes sense. And also, on top of that, when you have actually tokens that represent one-to-one form of a pre-IPO stock, you can actually create your own pools on other platforms. So making the EVM compliant, hopefully at one day, other platforms interoperable. I think that's also part of a lot of these exchanges, idea. So Solana's coming up, right? A lot of the platforms are trying to make it also Solana compliant. We are trying to see what is the best way to give people liquidity. And I think blockchain may be the answer for the illiquidity problem when it comes to private shares. So today, besides the governments like, a lot of people talk about UAE, right? They're very advanced in these kind of adoption. Switzerland, obviously, we spend a lot of time in Zug as well. We're actually now discussing with CMS, which is in Saudi Arabia, right? The prince himself really wants to see adoption in this area. He was like, we want to bring 30,000 Ethereum developers to Jeddah. I was like, I don't know how many there are in the world, to be honest, but 30,000 seems like a really high number. But that's like just an idea why people really want to see adoption. And how we're going to build that, obviously from a regulatory point of view, we need to educate the regulators, right? The US obviously has a huge debacle right now. We don't know how long this is going to last, thanks to our election, who knows. But in other parts of the world, I do see that governments are trying to learn firsthand how to think about creating more liquidity in this private equity world, but also how do we actually make financial system more efficient in parts of the world where they don't have as much of a robust capital market system. So that's where we see also opportunity. How do we go into a part of the world where that pre-IPO market doesn't exist, but can we build it on-chain first? We want to be the first on-chain private equity liquidity platform in the world.
Thank you. So, you guys mentioned a lot of the positives, right, of putting things on chain, but I imagine it's very complex to manage that as a big financial institution. So maybe we could discuss a little bit on how you custody and how you do key management. Tanvi, do you want to tell us how you guys did it at UBS?
I would not talk about that more from a UBS standpoint, but definitely can give you a view more across how banks manage it. To your point on custody, that's the number one, idea or the more mainstream opportunity for the big banks, especially the ones that are in existence for a long time. And are trusted very well with the wealth clients, UBS being one of them. And even if you're not trading in crypto as a bank, you would need to be able to create that custody for the new asset class. Because as you do custody for all the other assets for your client, you do not want to be the one that just doesn't do one. And as in more, the wealthy clients are having bigger exposures in this market, custody remains to be the number one solution, even for the very, very conservative banks, not wanting to play full on the blockchain market. When it comes to how do you manage liquidity and how do you think about building, I think the interoperability is said many times, but done very few times on how that works. Is it a technical problem, or is it also a policy and a regulatory problem? In my view, it's all of it together. Technically, we've met a lot of amazing vendors over the years. Many of them are here at the Proof of Talk as well. But to go from one jurisdiction to another, as I mentioned, and to stitch that regulatory framework together is challenging. So interoperability in that sense of the word is not yet solved for. I think regulators are getting more educated, are getting, at least in Asia, in UAE, as you mentioned, and also in Switzerland. The UK has opened up their sandboxes. So I think over this part of the world, it seems to be more likely to come up with a better solution on cross-jurisdictional alignments for tokenization to operate fundamentally. And last of all, the tokenization, to my view, needs to be beneficial. It needs to be deriving economic value. Just the fundamentals of putting things on token is not valuable enough, which we have all seen from the POCs and multiple different examples of what the big banks have done. So I think a lot of people are also now thinking about the economics, the tokenomics of what to put on token and how do you put it on token, which is where the assets needs to be smarter in order to create liquidity. Just by putting them on chain, it will not.
Absolutely. Natacha, I wonder how does that compare to how you view it at BNB?
I fully agree with everything Tanvi just said. On our side, we have the same kind of challenges, fragmented regulation, as you mentioned. It's getting better with good initiatives to provide more harmonized frameworks, but at the moment there are still discrepancies across countries and across regions, and it's definitely an issue preventing the activity from scaling up at a more global level. As a custodian, of course, one of our main challenge is to provide safe management of private keys for our clients, either by building in-house capabilities or to identify the good, reliable external solution, coping with new increased cybersecurity risks for the new technology. And another challenge I'm thinking of is the ability to safely connect, as you were saying as well, to various distinct DLT platforms and networks, and the importance to perform very thorough IT due diligences.
Thank you. And then Ellie, how does this compare to how you guys are custodying and managing your tokenized fund? Was there any challenge to get this implemented and ready in time for this year?
No, it's a great question. As an asset manager, we do not hold custody for digital assets. We're using third-party qualified institutional custodian, the Coinbase of the world, for specifically digital assets. And then when it comes to tokenization, of course, the BNP of the world, the BNY of the world, all of these large banks will have a significant place when it comes to real-world asset tokenization, because we have to actually follow the regulatory frameworks across jurisdictions which differ from one another. And as well, that's why you're going to see that the banks are going to be extremely relevant when it comes to the asset tokenization. But the only caveat that we see today is the distribution of the existing assets that are tokenized. They're only available across small-scale broker-dealers at the moment. And the reason is because, of course, these are test pilots or even small-scale experiments. But the exciting part is going to be when we're going to have stock exchanges, large brokerage firms, investment platforms, asset managers, and banks that would be integrated with blockchain technology. It's already happening. We see that, with the London Stock Exchange, Deutsche Börse, New York Stock Exchange. They're already thinking and building up a roadmap for having integrations directly with Ethereum as well as over smart contract platforms. And this is where this is going to be really exciting because, you know, in the 90s, when you told people, you know, how would you be using email today, people would be asking you, but what the hell is an email? And I think this is the same question that we have today when it comes to, you know, having, for example, like a wallet address, right? You know, in the 90s, we had only 5% of the world population that had access to the internet. Today, we have less than 5% of the world population that have access to crypto wallets. And I think the more and more people we get comfortable with custodial and non-custodial solutions via a crypto wallet, the better we're going to get. And I think it really comes down to making sure that we really fix the divergence in regulatory frameworks. The fact that also the technology is not yet ready to actually have trillions of transactions on a yearly basis, right? Given the fact that they have some limitations, but it's improving. And then the third pillar is to allow people to have an easy access in a way that is comfortable for them, right? So when you think about an ETP for crypto assets, through the bank and the brokerage account, you can have access to crypto. You don't need to open up another account in order to actually have access or exposure to the underlying. And I think this is exactly what we need for asset tokenization, so that as people get comfortable with this asset class, they should have an easy access to the existing rails, but also integrating with the novel technologies as well.
Thank you. That was great. Cathryn, yeah, go ahead.
Yeah, so I'll just add something quickly because I think everyone already covered quite a bit. In our world, we do notice that there are a lot of operating, like basically in the old traditional PVC, you have a lot of fund administrators that's serving, you know, kind of the old school type of broker-dealer players. What have we noticed, at least in the US, is that there are a lot of, well, maybe, when I say a lot, I mean like a dozen, right? A few players that really became big because they only focus on crypto related exchanges, for example. So I've noticed fund administrators who grew from like maybe a couple $100 million assets management to like tens of billions assets under management on the fund admin side, just because they became, you know, crypto first. And I think that's like a really interesting trend. We work with quite a few, and because, you know, with our business, we had to go outside of the US. So coming from like looking at Asian players, looking at, you know, Swiss, British, and also, you know, in the Bahamas, we know this, we have to build so many relationships with different banks, different, you know, back office providers, even accountants. Most accountants have no idea how to deal with this stuff, right? This is like the first time they notice that we have to show them a ledger and they're like, what is going on, right? So how do you find the right people to actually help you no matter what? I mean, you guys probably know after the whole FTX debacle, right? I mean, there was quite a bit of going on like on the back office side. People didn't know how to deal with it. So we had to go and make sure there were providers who can handle these kind of emergency situations. Also with SVB failing, I mean, literally, I was in San Francisco and I saw like everybody start freaking out about their, you know, where do I go after this one big banking partner fails? All of a sudden, the large banks are like trying to take their business. The smaller banks are trying to become more crypto friendly, right? So we noticed that every single time when we have these like waves, we do notice new players who actually become crypto focused, becoming much bigger players, and we want to be, you know, part of that ecosystem and ride with them.
Awesome. You guys talked a lot about regulation just now, and that's actually our next question is, how is different regulatory regimes around the world impacting what you can do with tokenizing of funds? Ellie, maybe you want to kick us off, because you just mentioned a lot in the last bit that you were saying.
No, absolutely. I mean, we see that, for example, in the UK, they just started with their sandbox opened for applications, of course, not financial advice for anyone, but they actually started to open up applications for asset managers and banks to actually operate under the purview of the FCA, so the financial regulator. We see that as well in Singapore with the MIS. We also see that as well in Singapore and in other places as well in the US. For example, the Federal Reserve mentioned that they were very open to have a cross-collaboration with the Bank of England to actually have a sandboxes between the two countries. And I think this is really the good step forward for small-scale experiments. But if you want to actually see now, you know, global-scale access to, you know, for example, through your bank and brokerage account, let's say like an Apple stock or a Tesla stock, without realizing that using blockchain technology, I think this is the ideal scenario that we want to see. Today, for example, when you're using your mobile phone, some of you guys are using your mobile phone right now, you don't think about iOS or Android. Unless you have to update your operating system, you don't think about the technology itself. You don't just think about the interaction that you must have over your mobile phone. You don't think about TCP/IP. You don't think about SMTP. These are all the internet protocols that we take for granted because all the fantastic entrepreneurs over the past 30 days, 30 years, actually spent a lot of time to make sure that we have a comfortable experience over the internet. And that's why I think we're going to move away from being online to being on-chain. It's going to take a while, 20 years. But I think it's going to be something that will be part of our daily lives without us realizing. But that really starts with sound regulatory frameworks to protect the consumers and galvanize the innovation for entrepreneurs to participate and also the countries to acquire and attract foreign investments.
Yeah, those are all great points. Tanvi, maybe you want to talk a little bit about MiCA and the other parts of regulation that you've been following?
Yeah, I think MiCA is coming to life end of June. Time will tell how effective it would be, but it gives a proper structure to the European markets on how tokenization needs to move forward, how securities needs to move forward. But in terms of building all these ecosystems of regulators coming together, which is the point I feel we had maximum challenge with, because you cannot do tokenization in one country to begin with. It needs to go cross-border, whether it's clients or whether it's the issuance. And in that context, I'm also very, very kicked about the new project from BIS on Project Agora. So it's trying to bring in 7 economies, as in the countries, onto the platform when it comes to exchange of money, exchange of digital money, and about 20 plus companies from the private sector to play in this sandbox. Because with this, I think we are not going to move forward cross-international in how regulations are going to be managed. Obviously, as is mentioned, it's really, really amazing to see what MAS is doing. And also Qatar opened up its sandbox a couple of weeks back. Obviously, UAE is very promising. So it's really great what each of them are doing individually, but also it's equally important to get to see how this is going to work in tandem. So I'm happy that BIS is in Switzerland and we get a very close interaction to talk and work with them.
And Natacha, how does regulation affect your day-to-day? I'm sure you guys are spending a lot of time on it at BNP.
Indeed. Again, agree a lot with what Tanvi just said. Very, very happy with the developments these last years. A lot of improvement with regulators being more and more engaged, especially in Europe. On our side, we are, of course, a bit more focused on Europe. Very engaged to bring more regulatory clarity and also to bring adapted frameworks where digital assets can be explored and to adapt the regulation with the market participants. I'm thinking about the EU DLT pilot regime. You also mentioned the UK sandbox. And I agree with Tanvi. There are very interesting developments lately with initiatives moving from national borders to wider projects across region and across jurisdiction, and it's very important to avoid fragmentation, the fragmentation we have today, and to foster alignment across jurisdictions.
Awesome. Cathryn, what have you been seeing on the regulatory side?
So we tried with various regulatory approval process. So back in the day, 2014, we were trying to become a broker-dealer in the US. As an entrepreneur, I would highly recommend initially not to spend most of your money on compliance. I know that obviously is important, but we spend like a lot, in the millions, just as a startup to get that done. And when we had to talk to our investors, our venture investors about it, they were like, this is like astronomical numbers for a startup. So we went through, multiple layers of back and forth with the SEC, with FINRA, just to get them comfortable about what we're doing. Once we start talking about blockchain, and at the time we were transacting globally, a lot of our numbers come from Asia, China, and that was like horrible for the US, as you know, given the geopolitical issues. So we sent like trucks and trucks of documents to the SEC just to prove to them we're not doing anything weird. So, that process gave me a lot of understanding of how it's like working with regulators. Then I went to China. We met with the CTO of China UnionPay. This is 2015. We took Vitalik there, trying to get him to like evangelize, right? And I just remember it was such an interesting conversation. Like the gentleman was like, well, what are you guys doing, etc. And then we showed them our code on GitHub. He was like, okay, this makes sense. Then he opened up his Lenovo computer with like the red dot in the middle. And he was like, here's my plan for the China digital yuan. You know, like, this is 2015, right? So we knew that this was going to be more centralized in China. So we're like, okay, probably not a good time to do this right now in China. So we left. And but at the same time, we kept in touch, obviously, with folks that are focused on creating more of a, alternative financial system. So obviously, there are quite a bit, action going on in Asia right now, mainly out of Singapore. So MAS obviously was, adopting some of the changes. We were talking with folks that had the Bretton Woods, discussion in Singapore also. So there were definitely government adoption, and they were trying to see what's going on. I mean, the grandson of Lee Kuan Yew is actually on GovTech. So he's like really focused on adopting these newest technology, but they also want to be very considerate of like potential backlashes, right? Obviously, bad actors are involved sometimes, so they kind of pull back a little bit. So I see this as kind of waves, ebbs, and how can we find more proper adoption amongst institutions. I think that's really going to be the key for the regulators to give more of a green light. And we like to see obviously what's going on in Switzerland, what's going on in London. How do we leverage that system in places like the Middle East and Asia? That's what I would like to see, a global alliance coming together. Back in 2015, we had the Crowdfunding Association of America, where we went to DC and lobbied the government to pass this new law called the Jobs Act. So, I think that is required for a global adoption to happen, where the biggest exchanges, the biggest protocols coming together and say, this is needed, and look at our success. Without the success, it's really hard to, argue for this case. So with those kind of experiences, I do feel very confident that with the players now involved in this entire ecosystem, we can create a much better, much more global play.
That was awesome. You guys highlighted a lot of the positive jurisdictions around the world. I hope the US is going to follow suit and put out thoughtful regulation like Singapore, the EU, and Dubai has done already. We're running up a little bit short on time than we had planned initially, so I'm going to skip ahead a couple questions. But I'd love to know the sector of RWAs that you guys are the most excited about. And maybe we can start with Cathryn.
We are really excited about a new asset class that we're trying to, in a few months you will see. But basically, it's a very niche market. But what I see is that a lot of folks are trying to do something along with their employee shares. This is obviously an area that has become more of a niche market in the US. But I see interesting plays being had for companies that are being more open-minded. Right? How do you pay for your exercise? The stock is very difficult, and there's a lot of lending involved, structured products along those lines. So I'm waiting to see how the market reacts to this.
Awesome. Natasha, what about you?
The area where we see the most short-term benefits with blockchain and where we have the most interest and appetite from our clients is fund administration. And this is where we are experimenting the most at the moment, and where, as you may know, it's an area where there are a lot of stakeholders who need to interconnect with each other, who need to interact with each other, very long, complex, fragmented processes. And this is where very quickly we could bring value with blockchain, and replacing a lot of manual processes with automated electronic flows between players. So,
absolutely. Tanvi, what about you?
As Cathryn said, you'll see in a few months on what we are building on, but I'm very excited about the illiquid financial assets that are very regional in nature to bring them more globally. Because if an asset class is working well for one economy, it's in their interest to bring them more globally. And then it's also exciting, also on the buy side, to have access and exposure to instruments you could not have before, especially for not the retail, but not the corporations, the high net worth individuals that can have the a potential of taking risks in this alternative asset class. So examples like Sukuk bonds from the Sharia-compliant Middle East. I think that's a very illiquid asset, but extremely exciting in terms of the growth and the returns it has given, and because of the population, the Muslim population across the globe, as it is Sharia-compliant.
And maybe you want to add a little bit about what you're looking at on the AI side. Like, I previously wouldn't have thought of that as much as the RWA sector, but I think that you're doing some stuff in the space that's very interesting.
All we do is to make AI useful. I know AI is such a big buzzword that everybody tends to, even the pen and the toothbrush is AI enabled these days. So that's not the topic. And I talk about smart assets, and you try to tokenize something. The smart contracts are not very smart, as we all know. And the oracles that feed that is very hard to authenticate if it's feeding it the right information. As we all talked and listened to also the previous discussion, the market goes up and down based on the Twitters, which cannot be the future, right? It's just a new asset class. What people think about it just moves the markets. What if the assets moves based on real information, which is the policies, the GDP, the inflation rates, the interests, and that is what we want to build into tokenization of assets to make it smarter based on some foundational metrics and not because of the sentiments. So that's where the integration of AI and tokenization, in my view, is most effective, is how do you make your smart contract smarter, and how do you enable your oracles to not have a flavor of an implementation from vendor one to vendor two.
Wow, that's fascinating. Ellie, last but not least, what are the areas of tokenization that are the most exciting for you? And maybe you could tell us short term, because you just had the Bitcoin ETF, and also long term, like 20 years' time.
Yeah, sure. The thing that we're super excited about, incredibly excited actually, is the tokenization of money market funds and cash equivalents. And the reason is because they can be used as collateral for payments. And we can see that around the world, many countries look for an alternative currency when there is a local currency debasement or a complete collapse because of a political crisis or an economical crisis. We see in places like Lebanon or Venezuela or Argentina and more, we can see that all of these US-based stable coins are actually in need for these kind of payments. And that's actually in line as well with the fact that today when we look at the asset class, just for US dollar tokenization, so stable coins, they represent well over $200 billion in AUM, right? When you look at the Fidelity money market fund, the world's largest actually, which is about $175 billion in AUM, that was created in the 50s. Right? And the stablecoins were created back in like 2014 for Tether. So we can see the disruption in the adoption and the access for dollars, but also there is a need for euro, for example, in places like Turkey. And I think this is really interesting to see that across the world, tokenization goes hand in hand as well to actually have this humanitarian need as well that actually blockchain came out in 2008 for solving that major issue.
Those are some great points. I'm really excited about tokenization for emerging markets around the world and giving them more access to structured financial products. Cathryn, I saw you grab your mic. Did you have something you wanted to add?
I guess like the one thing I just want to add is we've seen also latest adoption of, I don't know, back in the day, if you remember, like thematic investments, right? So different pockets, you can be investing in everything Elon Musk. You can be investing, supercomputers, semiconductor, right? So we like that, and we work with a lot of wealth managers around the world. Some are very nouveau robo-advisors in Canada. Some are very interesting kind of crowdfunding-esque platforms in Saudi Arabia. So we're doing POCs with these guys and trying to see how their folks adopt these type of thematic portfolios, but actually underneath it's all crypto, on-chain. Like a lot of times they don't even need to explain to them that this is on-chain because most people don't care. But it just makes our back office a lot easier. And that's kind of the beauty sometimes when you push something out, people like it, but they actually don't understand the back-end technology, how it's making it easier until later, like, that makes sense. We don't have to have a bunch of accountants literally look at Excel sheet nonstop. We work with like hundreds of family offices. How many times a client comes to us and say, actually, I have no idea what private investment we have because we invested with like a zillion different players and we just get K1s from every single person and my accountant has to manually upload this together and figure it out as like good luck tax season. So, how do we make all of this centralized and actually simplify the back office? I think is actually one thing most people don't understand, the benefit of using one centralized ledger almost. So that's where I think also from adoption curve point of view, potentially down the road with AI, right? Because you see a lot of companies that are trying to automate accounting and finance, and we're finding a crossover of use case based on that type of adoption.
Yeah, those are great points. I mean, I think it's cool how DLT technology is able to be used across really old, like traditional markets that are very liquid today, but then also things that have been illiquid, like real estate. Do we have time? Did you want to say something, Tanvi? Okay, do we have time for a question from the crowd, or one question? Any, yeah? I guess.
Hey guys, my name's Demarkova. I work in Brussels in political intelligence. So we have a moment now, an opportunity with the European Union, which I noticed a bunch of you skipped over. So you'll be like London, Singapore, and we're right in the middle. But we've got an opportunity now to create a bit of a wish list for the new Commission about what policy changes might unlock tokenization. And I do mean capital markets rules rather than MiCA. So I was interested in your experience, and of course those of you that are on the local market as well, what should be on that wish list?
Definitely, first thing I would say is cash on chain, a widely accepted mean of payment on chain.
Sure. I think it would be really important to have a fair and equal treatment across service provider that do want to be participating in these capital markets policy, specifically in the case that we cannot have specific favors for larger players if the smaller players are also regulated and have the same license. So I would say equal treatment for service providers is really important, from fund administrators to banks to the transfer agents or the collateral agents, the authorized participants, all have to be coming in a fair treatment. But also I would say it would be really important for you guys to think about how DLTs are very different from public blockchains, and if they get really comfortable with the public infrastructure, that may actually run into governance issues, right? So how do you think about forks? How do you think about the change in developer design? Or how do you think about, for example, when there is two blockchains now that run across one another, which ones are going to peak? How are you going to deal with asset recovery? If, for example, today there is a specific hack on the platform. So I think also when you think about the fairness and the soundness of the security is going to be really, really important to consider in your policy. But again, it's a new world, so they would have to go through multiple educational series to really understand the nuts and bolts of the public blockchain infrastructure.
And something very basic to have the similar set of terminology across the board. What we call a security in one part of the world is not a security in the others. And in order for this ecosystem to grow, if all the jurisdictions at least start with the same vocabulary and the same mapping of the terms being used, I think that will be a great start before we can start doing some complex stuff.
Oh, and by the way, at 21 Shares, we launched the world's first multi-layered classification standard, very similar to GICS for the stock market, called GCCS. So check it out. We use that for regulators, from the AMF to the FCA to the SEC. So that's one way for us to really push for a global standard and a unique taxonomy, but that's something that we all have to agree upon and apply across jurisdictions.
Thank you guys so much for joining this panel today and taking time out of your days to educate us with these awesome insights.